the one in Massachusetts where I had my kids and they grew up in, best schools in the world, I would argue. They taught them nothing about investing. And then along comes a platform like Robinhood, and all of a sudden, kids in their 20s and 30s that would never get touched by Money Center Bank or an online broker because they're not a profitable account. They only have a few $100s to invest. Vlad and his team create this platform and now have millions of people learning about the ways of the market. And the market, even for sophisticated investors.
They're learning by losing, though. They're learning by losing.
Every investor loses money, Bill. Every loser. Everyone learns from the market.
I don't think we...
So you're going to protect me from losing money? Are you kidding? Speculation is the definition of the market.
I don't kid.
Yeah, the bottom line is when you put money in harm's way in the market, you risk it. That will always be the way after both you and I are gone. And the more regulation you put on it, the more you hurt it. Because some people to investing a millisecond is an investment, and others 10 years. And you shouldn't have the right to define it for them. Let the market do that. That's what the market does. If we want viable capital markets, you have to let the market be the market. Just shine transparency on it. Don't try and make rules that have all kinds of second consequences that you can't determine at this point.
There is no transparency. There is no transparency here.
It's more transparent today.
In many aspects.
You can't say that what happened over the last 48 hours, the last two trading sessions, wasn't driven by transparency. We've never had millions of people at night talking to each other in social media saying, there's a hedge fund that's short, let's go get them. You know, you want to stick it to the man? I have no problem with it.
Being made. The problem
I think it's
in order to
fine.
have transparency, you have to have some certainty, and there is no certainty in any of this. There's wild speculation based on nothing. That is not an honest marketplace.
I'm sorry, but you're going to have to live with speculation. You're always going to have
speculation. I can live with based on
investing.
Rationality. Rational speculation is one thing. Dishonesty.
How do you know that GameStop executives aren't going to take advantage of this situation and build a brand and make a pivot, just like Netflix did when they were shipping out CDs in the mail? You don't know.
Because they've shown
you have no idea. Either do I.
They haven't even raised any capital on it. If they were going to be doing that, why wouldn't they be raising capital now to try to do that? They're not.
Well, maybe they will. We don't know. That's the market. My whole point is if they can raise capital at these prices, they should.
What I do know is many people who are investing in this have absolutely no idea why they're getting into it. They just think it's a train they don't want to miss. And I fear that many of them will lose. I also think it's going to have effects on other aspects of the marketplace. This is not healthy for our economy at this very fragile time.
Hey, Secretary Galvin, you might like this, Kevin. Back in 1982, when Apple came out, I guess are you familiar with this, Secretary Galvin? That Massachusetts didn't want anyone buying. They wouldn't let anyone buy the shares of Apple because they were way too speculative, and they thought people might.
That was before my time.
I know.
I'm not sure.
But is that not? Well, I mean, is it that when things go absolutely bonkers and a nanny state or whatever you want to call it gets involved?
Well, it's not a nanny state. I mean, giving people honest advice.
Well, you can't protect everyone from everything.
It's not. We have a reputation and a deserved one of protecting investors. We believe in honesty. That's what we want. Yes, we want transparency. But when you're enticing people who have very little idea what they're doing, as some of these entities are, to invest in things that have no rational basis, that is not good. It does call for a national
Who decides what's rational, though, Secretary? I wouldn't want a politician deciding that, or...
Well, I think regulators
Bill,
who
you have
it's
every
not necessarily
right.
A politician. That's why we have a Securities and Exchange Commission.
You have every right to voice your concerns, along with the hundreds of millions of other people that are on social media voicing theirs too. And let the collective decide.
Fair.
That is the definition of the market. The beautiful thing that we call the market, that is the envy of the world, where people raise money and start companies, leave it alone. Let it do its thing. That's exactly what it should do.
Kevin, let me just ask you this, though. If this goes wrong, and I think it's almost impossible to think that it won't, the quote-unquote speculators never blame themselves. They don't. And I imagine you will also find, on top of this, some levels of fraud, people taking advantage of people throughout this process. So the question is, do you believe that the American public is, quote-unquote, responsible enough and is willing to demonstrably accept the losses, and therefore there should be no This goes to the social safety net and everything else. If people start filing for bankruptcy, who is supposed to pay their bills? Are taxpayers supposed to pay their bills? We as a country have tried to, the lessons of the financial crisis seem to be turned on their head in this instance. There have been this emphasis on trying to protect the little guy, and now everybody's saying don't protect the little guy, because by protecting the little guy, you're protecting him against the big guy, right? And it's sort of this unique dynamic. It's very hard to try to understand what the right answer is, but I think the answer is you are supposed to protect the little guy in the end from losses that they can't afford. You think that's not fair?
No, I think what's more important is that they educate, that they learn the ways of investing that they're going to need later in life to support themselves in retirement. And frankly, I am not a fan of saving any business. I hate the PPP loans. I hate the bailouts. I don't want any of that. I've said that many, many times. The only people I want to protect now with the capital we're printing are people that are unemployed while our economy shifts and turns into the digital behemoth it's about to become. I don't want to support airlines. I don't want to support AMC. I don't care if GameStop goes bankrupt. And I really don't care, Andrew, if a few hedge funds go to zero. Who cares? I think it's great.
I'm not talking about the hedge funds. The hedge funds. But what happens with the kids who are taking the stimulus checks, putting it on margin, and could eventually be filing for bankruptcy?
Oh, no, Andrew, they're learning how to be investors. They're learning about the risk of the market. Oh, no, that's a horrible thing. We forgot to educate them in high school, so let them learn in the real world, which is even better. I support Vlad. I support Robinhood. I think this is fantastic what's going on. Leave it alone. It's a great thing that's happening here.
Obviously, I disagree. I think you're putting the marketplace at risk. I think by introducing this type of wild speculation, you're putting our economy at risk at a very fragile time. I think it demands action by the national regulator, and I hope it happens very quickly.
Okay, we'll end on that note. Secretary Galvin, thank you for making your points. Kevin O'Leary, I don't know. You just need to just be more strident about things, and all this so wishy-washy all the time. You got to tell us what you really, really feel next time. Can you do that? You're free to do
Absolutely,
it. Absolutely,
Joe. Oh, okay. You know I love doing it.
God, we love having you too. I could use you on about. I put anyone in Secretary Galvin's seat, and I'll stick you on the other side, and I know that we're going to have a good conversation, and that's what we're looking for. It's cable. Anyway, and this extra, thanks guys, thank you. And this extra note, got a money dispute. Kevin wants to hear all sides and help you determine the best way forward. Go to cnbc.com/money dispute and tell him your story. And another note, don't miss the former chairman of TD Ameritrade, Joe Moglia, right here on Squawk Box on Monday morning at 8 a.m. Anyone noticed how great, Coastal Carolina, they got great at football. They even got good at basketball. I don't know what this guy did. So I don't know. He runs companies. He runs college NCAA sports teams. Coastal Carolina was a real deal. He wasn't there anymore. I don't think. But I think it's his program.
The Moglia
basically.
effect.
Yeah, the Moglia effect.
Yeah, it's the program he set up, and he did wonders with it.
Unbelievable.
Guys, I want to get back to the news that we just got on the efficacy of Johnson & Johnson's COVID-19 vaccine. This is pretty important. The market is trading this down. It's a Dow component. They don't like the efficacy numbers because I'll remind you again, it was 72% effective in the United States, 66% efficacy worldwide. And that's because they are testing right now in areas like South Africa and Latin America where you're seeing these other strains. Those strains weren't there when you had Moderna and Pfizer that were out doing their testing. Dr. Scott Gottlieb was tweeting about this, and I think this is important because Dr. Gottlieb, of course, is the former head of the FDA. He's also on the board of Pfizer, which is a competitor of Johnson & Johnson. But this is what he says. The J&J vaccine turns in a fantastic result. We now have 3 highly effective vaccines. This vaccine, J&J's, showed sustained and increasing immune protection over time, perhaps from a robust early induction of memory immune cells, CD4 and CD8. The protection was strong and durable. This one-shot vaccine was highly effective at preventing severe disease, even with the new variants. The milieu of disease is now more complex, even in the U.S. Trials done today are running into more mutated cases. Make no mistake, This is an important and wonderful development. And I think this is huge news because there are so many people who thought, okay, what are we going to do when it gets down to, will you take a shot that's less effective? Will you take that vaccine? And I'm saying this as somebody who's probably likely to get the J&J vaccine at some point. I'm not going to qualify for Moderna or Pfizer's shot anytime soon because of where I fall in the line. I would get that shot, even with 72% effectiveness or efficacy, even if it was lower than that, because the idea that it's preventing severe disease and keeping you from the hospital, that sounds like a pretty good deal when you are sitting around waiting. Would I love to have one of the other ones that has tested with higher efficacy? Sure. But if it's a question between getting this one now or not knowing when I'm going to be able to qualify for an appointment to get the others, I would take it. I had a family member who tested positive for COVID this week. Time matters when you're looking at some of these things. This is one shot, not two shots that have to be spaced out over 3 weeks, so you're talking about 6 weeks before you get the effectiveness. I would take it because we're at that point in this pandemic right now.
It's an unbelievable situation, Becky. It's an unbelievable situation to watch this, and people are going to be trying to figure out which ones they want to take. I imagine there's going to be bits of races for different ones at this point, but it's a positive. No question, it's a positive for humanity, hopefully. Meantime, on the other side of this break, more of my interview with the CEO of Robinhood on this GameStop saga, including his response to heavy criticism from Dave Portnoy of Barstool Sports. Plus, there's growing reaction in Washington to the drama as well. Top Republican on the House Financial Services Committee will join us on this topic. And new this morning, Robinhood restricting Bitcoin trading from instant deposits. You can check out Bitcoin jumping this morning. It was up as much as 20% at one point on the back of a comment by Elon Musk adding the hashtag Bitcoin to his Twitter bio. He also posted a cryptic tweet. In retrospect, it was inevitable. Was he talking about the run-up in price there? We'll talk about it when we return.
Still to come this morning, two big interviews you don't want to miss. Rocket Company CEO Jay Farner on housing and what it's like to have 30% short interest in your stock. Plus, Congressman Patrick McHenry on Washington's flourishing interest in retail trading platforms. Stay tuned, everybody. You're watching Squawk Box, and this is CNBC. Welcome back, everybody. We've been tracking the wild price moves in GameStop, AMC, Bed Bath & Beyond, and some of the other names out there. All of that activity is also impacting shares of publicly traded brokers. Our very own senior markets commentator, Mike Santoli, joins us right now. He's got more on that front. Mike, good morning.
Morning, Becky. Yeah, it just sent tremors throughout the market, made some big investors feel a little bit offsides for this level of volatility, even though it has not been all that volatile. We have this is a 6-month chart of the S&P 500 index fund. We kind of lost that really orderly, predictable uptrend that we had. Wednesday's low in the S&P 500 is just under 3750. That would be about 375 for this. So you're going to be playing with those levels. I think it's a matter of repositioning, working against pretty good macro sentiment. The bond market's not really showing a lot of stress. That's probably a positive. Let's look at those brokers, though, because the retail brokers are serving massive volumes right now. We're seeing the news with Robinhood having to go raise a little bit of liquidity just to be able to backstop a lot of these trades. And what this shows you is Interactive Brokers, Charles Schwab and Morgan Stanley, which now owns E-Trade, they have rolled a little bit. Even though you have these huge volumes, it's a really cost because people are paying zero commissions. So there's a lot of friction, a lot of capital requirements. And it's not as if it's a disaster for the firms. Ultimately, it's good to have your customers be very active in doing a lot with you. But in the short term, it's a little bit tough. Meanwhile, Virtu Financial, which is an electronic market maker, a middleman, handles a lot of the trades for these firms, has actually perked up because the volumes and the volatility and the opportunities to play these different price moves are a tailwind for a company like that, guys.
Okay. Mike, thank you for that. Just want to mention, we're seeing some comments crossing the wires from Dr. Fauci in regard to the J&J news this morning on this vaccine that appears to have a 72% efficacy demonstrated here in the United States. However, and this is where things get a little bit more complicated. You're looking at the stock down because of what they're seeing in South Africa. And this is having some people nervous, including Dr. Fauci, who's saying we can see we are going to be challenged given what's happened in South Africa with that new strain. It's really a wake-up call for us to be nimble and to be able to adjust as this virus will continue for certain to evolve and mutate. He calls it a wake-up call. And that, of course, weighing on Johnson & Johnson. And I think there's going to be some questions about how investors are going to be thinking about this as well, given this mutation and how significant it may or may not be. We're going to continue to follow this story throughout the rest of the program. When we come back, though, we're going to talk to the CEO of Rocket Company and shares of his personal experience heading a firm that's seen its fair share of stock shorting, plus housing in 2021 and beyond. Stay tuned. You're watching Squawk Box on CNBC.
Welcome back, everybody. In 2020, we saw the housing market grow despite the COVID-19 pandemic, actually in some cases because of it. In fact, a nice chunk of that growth was because of the pandemic as people sought more space outside of cities. Investors are now wondering if the market growth will sustain in the new year. And joining us right now to talk about that is Jay Farner. He's Rocket Company's CEO. Rocket Companies is the largest mortgage lender in the United States. By the way, its stock has seen quite a bit of shorting. So we're also going to ask Jay about that, too, just in light of this week's huge moves in GameStop. But Jay, welcome. It's good to see you. And why don't we start with the housing market? How are things doing right now?
Good morning, Becky. Well, great question, and actually ties into the comment that was read before the break from Dr. Fauci about the concern over the vaccine, and I think we're in this for the long haul, and that ties into the housing market. There's less than, I think, about 2 months worth of inventory out there right now. Demand for housing is tremendous. It's the highest it's been in over 15 years, and so we imagine 21 is going to be a very, very strong year for housing.
You know, there's been short supply, and we've also had incredibly low interest rates. What do you see on the supply front changing potentially any of that? And how have things happened with interest rates? We saw interest rates start to pick up a little bit before the 10-year fell back below 1%. Did you see any impact on what that meant for either mortgages or refinancing?
You know, rates are incredibly low and the payments are great as well. So a little bit of movement here or there really hasn't affected people's desire to buy. I think that you're going to continue to see technology play an important role in housing in 21, opening up inventory, encouraging people. We own ForSaleByOwner.com. You're going to watch more people think about selling their homes that way. And so with that technology, hopefully we'll get a larger amount of inventory, and with low interest rates, we'll see housing continue to grow.
Jay, I always wonder what happens with this, because you guys are the biggest right now, and you've grown every single year, gotten bigger and bigger and bigger. I know your expectations or your goal for what you're looking for market share is, what, 25% by the year 2030?
Yeah, we've said 25%. I mean, look, our mission here is to continue to grow out our platform. We've just announced our broker directory that we put on rocketmortgage.com. We've got over 43,000 brokers we're partnering with. We've got our thousands of retail loan officers. We've got our thousands of insurance agents and real estate agents that are working to originate Rocket Mortgage or refer clients to Rocket Mortgage. And so, our mission has been to grow that funnel, and really any way that a consumer wants to get a mortgage, a refinance, or a purchase, we're here to assist. And that's really kind of how we think about the future and how we're going to grow that market share and reach, whether it's 20, 25% or beyond. It's really about becoming that tech and client experience platform that empowers anybody in America to get a mortgage or buy a house.
What happens if the housing market turns down on a national level like it did back during the Great Recession, or what happens if there are problems because interest rates rise pretty rapidly? What would that mean for you?
Well, that's why we've got to diversify our ability to reach clients. Even in a down market, you'll see somewhere close to $2 trillion of mortgages to take place between purchase and refi. And so with that reach, with our brand that we're investing $1 billion a year plus in, including the Super Bowl Square promotion that we're doing right now, we've got the ability to grow market share. That's what we've demonstrated in the past. And if you look coming out of the Great Recession, that's exactly what we've done. And so although it can be a bit painful, of course, as we see interest rates rise or a shift in the housing market, usually what that means for us is our ability to grow and take market share, because our competitors aren't quite as efficient as we are when it comes to acquiring clients and taking care of mortgages. And the other thing, Becky, of course, is the additional businesses that we've added to our platform. So whether it's our Rocket Homes real estate business, our Rocket Auto car business, they're selling thousands of used cars a month at this point in time. Our personal loan business, Rocket Loans, we've got the ability to take care of clients in other ways in addition to mortgage.
Hey, Jay, you guys don't have any specific news this morning, and yet your stock right now is up by about 13%. We've talked an awful lot about GameStop and the other companies that have seen Reddit kind of really boost their shares and go after short holders, or the shorts in those stocks that are heavily shorted. You guys had a pretty significant short. I think as of the end of the year, it was 30% or something. Why is your stock up this morning? What do you think about what's been happening with Reddit?
Yeah, it's an interesting week, and as we have come out as a newer company to the public markets, I think there's always going to be a little bit of a tendency for the shorts to show up. But I'll remind everybody, between myself and our founder Dan Gilbert and our leadership team, we own 95% of Rocket companies because we feel so strongly about our ability to grow. We've been growing for 35 years. We've shown consistent ability to grow and be profitable in any kind of market cycle. And so I think the more we tell our story, the more we explain to folks the platform that we're building, you'll see our stock continue to do the right thing. The other important component, and you just pointed this out, we got a lot of retail investors in our stock. It's one of those stocks that people understand. They get a mortgage. They know the experience. They're familiar with Rocket companies and Quicken Loans. And so I think what you're seeing is they're participating at a higher rate than some other companies. And I think that bodes well for our stock.
Are you happy to see the retail traders chase out the shorts?
Well, like I mentioned, I feel really strong. I've been here 25 years. I know all the things that we're doing. I understand the power of the platform. I understand the profitability we're able to drive. And so, my advice would be that this is not a stock that you want to be short in. You might want to rethink your position if that's how you're playing it. We've got a great track record and a lot of exciting things we're working on.
Jay, I want to thank you for your time today. Always good to see you. Again, we'll keep a close eye on this, and we hope to have you back soon.
Yeah, thank you so much.
Thank you. Joe?
Thanks. That coming up, the latest on DC's plans to look into markets and retail trading. House Financial Services Committee member Patrick McHenry will join us live. Stay tuned. You're watching Squawk Box on CNBC.
Coming up when we return, Robinhood CEO on yesterday's contentious decision to restrict GameStop trading. Plus, his response to criticism from Barstool Sports' David Portnoy. Stay tuned. Squawk Box returns right after this. Welcome back to Squawk Box. Robinhood CEO Vlad Tenev speaking out as we conclude a wild week of trading in names like GameStop and AMC. In an interview last night, I asked Vlad how concerned he is and how concerned really customers should be about the robustness of his own system right now.
Well, to be clear, this was the system working. We have the ability to restrict buying in symbols for unprecedented market conditions such as this. And to be clear, we didn't shut down the system. We shut down buying for these 13 stocks, for these 13 securities, but customers that held positions could still sell, and customers still could buy and sell the thousands of other securities